Now we're going to talk about Massmart. Well, that's interesting, and that's because I've made a couple of mentions already of the Builders Warehouse business, which is a big and important part of this business. Although, of course, they also own Macro, Game, DionWired, which takes them into a sort of Best Buy lookalike, as well as Cambridge, which are those purple stores you see in high transit areas. Lots of them around taxi ranks and that kind of thing, limited range, cheap costs. And then CBW, which is like a rural area cash and carry type business. Remember, what's interesting about this one is that they are 51% owned by Walmart, which of course is the world's largest retailer, headquartered in Bentonville, Arkansas. Haven't really done a lot with it though. Market cap of this company is 23.5 billion rands. Price earnings ratio 20.08, dividend yield 1.72. It's been a bit of a laggard on the local scene. I'm not quite sure why.
Yeah, it's always one, if you look at a price to earnings multiple, that's expensive. So it always trades in the mid to high 20s. Usually the Walmart deal came with a lot of fanfare. That was in 2011, if I remember correctly. It's a long time ago now. It's a long time ago, and it's been a terrible investment for Walmart. I mean, they put in close to $2 billion there, around 148 Rand a share. With the weakening of the Rand and this share coming down to almost 100 Rand, they've, their investment is almost halved. So their timing was wrong. They got in near the top.
And at the sense that it was like a beginning of an Africa-wide expansion strategy, but then we've seen that some of the other target markets, which Walmart was in, for example, in Angola and in Nigeria and so on, haven't exactly shot the lights out. Commodity prices have been weak. So
correct.
From the head office of Walmart, they must be thinking, well, I'm not sure about this African strategy.
Yeah, so the growth story that they bought hasn't really realized yet. There's only a few players like maybe the ShopRites that have really grown their African footprint effectively in that regard. They've struggled, so they're trying to get growth in the foods. The housing and the building division, Mass Builders, has managed to grow, but the bigger retail stuff is really not exciting.
Macro does very well in general dry goods and liquor, which is a very big sales area for them. Let's have a look at the share chart to see what we're talking about. So 148 is where Walmart got involved, but that was earlier, before, on the left-hand side of the chart, and you can see what you're talking about then. It goes up into 2013, but since then it's kind of drifted away. There's something funny about the way they report their results as well, where they mark to market their debt related to intercompany loans into their foreign operations, which causes quite a high degree of earnings volatility, which is unfortunate because it clouds the underlying picture, which I think they should try to draw more attention to. Okay, so we know that the business unit that constitutes the mass build operation is a very strong performer. No scope for them to spin stuff out? I guess not, because why would Walmart want to do that?
No, correct. I mean, I think it's like that. There's a small outside chance that at some stage, if Walmart doesn't see an improvement, they might reverse their investment. I think it's still premature for that.
That would be difficult because I'm not sure who they would sell it to.
Correct, but at some stage they might have to make a call on that. I mean, companies struggling at the moment. Maybe this is the bottom of its cycle. I'm going to wait and see. Not hot there.
Not hot. Okay, I'm going to join you with that one as well. Right.